Okay, looks like we are good. All right, so welcome everyone to the India Market Review, Part 1. This is on 19th, Sunday, 19th April 2020. We're going to look at what's happened in the global markets, and then we'll have a separate section on looking at the Indian sectoral indices. So actually, at least this version, this section is more than a IMR, it's a GMR, a global markets review, and we'll just quickly run through what's happening with the major indices in the world and get a perspective of what's going on, right? All right. So as you can see, this is the S&P 500 index, the major index in US, and I put the weekly chart here. Like we said last time, we were expecting it to go up. It has done exactly that. We mentioned that the indicators last week also were quite strong and they were not showing any weakness or any divergences at all. And based on that, plus crossing of important moving averages, certain further up moves could be expected, which is what has panned out. So the S&P 500 is right now sitting at 2,874.6 as it's closed, and it's come to, as you can see on your screen, a resistance zone which is between 2,870 and 3,117. So in this resistance zone, which has come from a series of tops and bottoms made through last year, um, and also a bunch of moving averages which are sitting within that resistance zone, we could see the S&P 500 maybe at least pause for some time if it goes up further, and it will be really interesting to see if it can break through all the moving averages and all the resistances which are there right now and go beyond 3,120. If it can go beyond 3020, that would, I think, be a major breakout, and you could see then the US market shooting up much further. So right now it's in that sort of dicey area where it's difficult to make a prediction as to exactly how it may pan out. But as of now, still looking like some upside is definitely left, right? At some separate time, we'll have a more separate session on a more Elliott wave based analysis of the moves. And if we just cursorily look at it here, then it doesn't look like a completed Elliott wave pattern is yet over. And that's another reason why certain further up moves are possible in my view, right? So right now this level 2008 870 880, 2900, and all the way, it's really tough. Every 10-20 points could be places where resistances could be met, right? On the other hand, we are in a weekend right now. You never know, because of the heightened volatility because of corona, etc. Any event, economic, political, something, etc., could suddenly make the market move either ways, right? So we are at a resistance zone and need to keep a keen eye on what is likely to happen. Having said that, the bias is upwards. Okay. All right. Same thing for the Nasdaq 100, or more technology-based index. The S&P 500 is more a more broad-based index. So slight difference. The S&P was a green candle. This one is a red candle, right? But it's still closed higher than 0.85% higher, and basically the same setup as is there in the S&P. The Doge, and quite close to, I mean, not very far from its life high. You're talking about a life high of about 9,700. We're talking about 8,800. It's just about 10%. One would have hardly thought that a crash has happened, something that I said last week also. Dow Jones also there, but you can see it's quite drastically different what the Dow Jones is doing. The recovery is definitely not as good as seen in the Nasdaq or okay. So this is the point that I was making last time, that on the so if you look at let me put that, where is the toolbar? Yes, there. Right. So as far as the recovery of the crash is concerned, it's the S&P 500 has made something about a 50-55% recovery, right? And similar for the Dow Jones. But when it comes to the Nasdaq, let's see how much that has done. Okay, that's almost done 70%, right? So about 10-15% more recovery than the uh, broad market indices out there in the US. And the theory we are going with is that Nasdaq, more technology, and with all this more work from home, remote working, webinars, etc., like we are doing right now, those companies are likely to do well. So anything internet enabled and over the fiber is probably, and it's probably going to do well in the coming, in the coming years too. There's a article, I think, in Economic Times today or India Times about TCS in India going to be a bellwether in dealing with in promoting work from home, and they want their company to really take on work from home or remote work very, very actively and strongly. So that's a corporate shift, and it'll be interesting to see, how many companies in the world actually go in that direction in the coming months and years. The Russell 2000, it's a much broader index, consists of every conceivable type of business there, business sectors rather, in the US, and you can see that's done a very poor 38% recovery, right? So clearly we have a divided market in the US, right? Some sectors are doing exceptionally well and some are really, really lagging. If one wanted to, one would, break down what further one can see in the different sectors of the US market and the different major sectors within the Russell 2000 and do a comparative analysis to see which sectors are doing well, which are not, right? Maybe some other time, not the scope of this webinar. Moving over to Europe, coming to the largest economy in Europe, as I said, DAX, right? So again, not a very happy situation, right? Uh, this is a pretty poor recovery in the DAX. Let me even make it weekly, right? So you're seeing the really long picture here from all the way from, okay, let's even bring in 2008, right? You're seeing that the market really, came uh, to the 2008 levels and basically very close to that and sort of bounced up from there. And that in itself is a huge thing for it to have gone back all the way to the 2008 levels. And then we have uh, uh, the 2015 peak and a bunch of levels all the way from 2017 onwards at around 12,350, which it's really nowhere close to. And even if you look at the uh, specific recovery now, right, this also is really not that much, right? So a little less than 50% is what it has done. And if you look at the way it has done it, you can clearly see diminishing volumes are okay. Volumes are okay, not great volumes. They are back to sort of the volumes, or I would say even higher volume. It's interesting actually. So here you had these sort of volumes going on here, right? Or how come this line came here? Right. So if you say earlier, this was the sort of volumes in the last year, and now slightly higher than that, or is what I would guess. So there is definitely some heightened activity which is going on, but the nature of the candles, this is a daily chart in which it has gone up. Little bit of a concern, weakness definitely showing up, and not able to really move substantially beyond any meaningful uh, resistances. So right on top is the 50-day moving average, and this 100 and 200 day sitting right there, and looks like it might not really go up there that fast. More weakness in DAX than definitely in okay in Europe, sorry, in US, and the same thing for France. France has come to a important resistance zone, right? So the 2019 fall, and again that's coinciding with a 2014 level. If we go back, I don't know how far we can go. Let's see if we can. Right. Okay. So this is a price level seen all the way back in 1997, right? 99 rather. Okay, that was the first time it came there. So we are coming, and then it came here again. There's a resistance there in 2002. That means after the dot-com bust. Uh, and a series of resistances that it is now facing. This is a multi-year resistance, almost a good 20-year resistance. So I'm not sure it's going to be able to, break out of that very convincingly or very soon, for that matter. Uh, and with extensions of lockdowns going on in Europe, and the economic hit taking more and more damage, not sure. So again, uh, we'll also have to see if the European Central Bank does things and all, but people say there's not much more that the central banks can do. However, we just have to wait and see. I mean, um, some stuff there that desperate measures, never know. All right, Euronext 100, more a pan-European index, and more or less the same thing as the CAC more than anything else, I would say. All right, so this data is only from 2010. We don't have more than that. And this has come down to the 2012 levels. I suspect this is something like what the CAC has done, right? 1997 levels, if there was more historical index data. And as you can see, it's come to a significant resistance. You can see multiple bottoms there, so all the way from 2013, 14 onwards, and several important times that this has been tested. So this would be a really good trade to watch if you are trading global markets, if this breaks out or it doesn't. Very interesting that on a weekly chart we've got 1, 2, 3, 4, 5 green candles, and we don't really have a recovery, a correction on a weekly basis. To that extent, this is still looking, quite strong. And on Friday, sort of close with the Marubozu right at those resistance level. We have a tweezer stop there, and if this breaks out, then it could definitely, go up all the way to. Let's see. Interesting. This is. I somehow really like it when we find some good setups like this. All right, so somewhere there, yeah, 2800, that's a quite a substantial move. Of course, intermediate resistances are there, but that's 15%, and 15% move on the Euronext index, or any European index for that matter, would be very, 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 very substantial, right? So that now, so all of them, DAX at a resistance, CAC at a resistance, but Euronext more pan-European and more of the large cap companies, they're showing some strength and all. Um, basically more a bullish bias than a bearish bias is what I would say, though the fact that all these resistances are there is something that one needs to really keep in mind, right? So yep, even the S&P 500 at a resistance. So if these resistances break, easily higher levels are possible. If these resistances hold, then definitely going down. And of course, we are doing all this to correlate it and connect it to what India might do. So quite interesting setup from where this, where these are. Coming to Toronto, the Toronto index, okay, that's also showing strength and substantially more volume on this than the European and other places indices. Definitely some significant meaningful buying that's happening there. And it's again, uh, okay, just looking at longer term data. Okay. Wow. So Toronto basically came to the 2000.com boom level, right? So visited this level after 20 years, right? So we're coming back to 2000 levels after 20 years. Of course, it's come there before, but that's 20-year, in a sense, a retest of a 20-year-old level. And then from here, we need to see how much it can pull back or it will move. This is right. So that's another very significant resistance there. There are, of course, more levels to be looking out for. And that's, where we are. So that yellow line coincides with this dashed line for the closing price. So again, across the globe, world, whether it's North America or Europe, we are seeing indices, major indices at significant resistances, right? And we'll have to see how these resistances break out. Moving over to the east, starting with Nikkei daily, again showing strength. Nice green Marubozu candle on Friday. Again, this is at resistance. It's really fascinating. Whenever I do this, one thing I'm always still awestruck by is how the markets globally coordinate like this. You find one level in one corner of the world and you're finding levels, similar levels across everywhere. Look at this. This is mid 2015. That's another level there. I could probably prefer it to be a little higher. Yeah, right. And we've basically come to test that level, right? And wow. So this level goes back all the way to 93. Right? And we spoke about, does Japan hold some lessons for us in terms of multi-decade levels? And that's again a topic for another discussion. We'll have that sometime. I'm not sure when, but we'll have it. Okay. So this is where Nikkei is again poised to go up. Nothing that's concerning too much on the indicators or anything. Looking good, definitely looking stronger than the European indices, and one could expect a further up move, at least maybe till this 21,000 levels on the index of Nikkei. Hang Seng, right, looking not so nice, right? Again at a resistance zone. Yep, you can see. Right. All right, so this is again waiting for breakout. So you can also see that many of the indices are in between the 20 and the 50-day exponential moving average. So is the Hang Seng, right? One more index that I would like to add is the SSE. Let's see if that is there. Nope, 1 second. Yeah. All right, so let's add that. So this is the Shanghai Stock Exchange, right? And this one I think has a pretty interesting picture, because if you look at the Shanghai exchange, of course that's China, right? You'll see that this really has a remarkably different picture than what the rest of the world is showing, right? So you look at this 2018, 19, 20 going sideways, and there was a big peak in 2015 which it has not recovered from. There was another massive peak in 2007, which is hardly there, 6,400, and right now we are at 3,000. So this is a story that I would like to investigate, and if anybody is interested, let me know, because I want to look deeper as to what's happening. We're talking about China growth, China growth, China growth, and I mean I'm not talking about just recent growth. You're talking about from 2008 onwards, and how come this index is at about half of what it was in 2008, right? Where is this growth that we are talking about? What happened to, I mean, is there economic growth which is not uh, reflected in the stock market, or the stock market wildly overvalued at that time and it's not what's going on? This is a question that's really interesting to probe, and the reason is this. One is just I guess intellectual curiosity. I'd like to know, but at the same time I would also maybe there are opportunities to be found. I First of all, I don't know how many of us are doing any global investing or trading, but that's, even if you're not, I think that there are some really important lessons to be learned here as to how things may pan out in the, I mean, what we want to also know with our analysis is how things will pan out in the next many years for India's economy and in the Indian stock market specifically, right? So this is another interesting conundrum which I think would be worth looking at, right? So if anybody is interested, has any insights, let me know and we'll take that as a separate conversation. Okay, Ravi is asking about Singapore, Australia, FTSE. FTSE, for some reason, TradingView does not have the British indices. I don't know why, right? So I'm going to skip that, but yes, we'll take this thing, ASX, for Australia. All right, this is the Australia S&P ASX index, right? So where's it gone? Somewhere. Oh, I thought I selected it. Oh, 1 second. Yeah. Why is it not selecting that? XTX, sorry. Okay, let me move that. So moving to, wow, what is this? Ah, 1 second. Okay. So we are looking for indices and all of that, and we went for Singapore, and we found this. I have no idea what the hell this is. This is, it says the Singapore 19 confirmed COVID-19, and it's got a name called COVID confirmed 19 index, right? And I have absolutely, this is what the number of patients in Singapore. It starts with zero on what is this? When was this? Whenever it was something. There's a data point there. I'm not getting. Okay, fine. Here is one. When is this? 23rd Jan. And then now the number is 5,992. That's what? Singapore number of cases. You can track that on TV. Fascinating. Okay, fine. Just had to sing a song about it. Just that's all. Mm. SGX. Okay. All right. So this is again crazy because SGX, all leveraged indices. Why can't we just have a simple non-leveraged index? Okay, unless somebody knows this. Right, this also has some limited data. All right, fine, forget it. We'll check for this somewhere else. So sorry about that. Yeah, this matching, that value is not matching, Ravi. Right, so fine. So anyhow, let's just come back to what we were discussing, just to review. So just getting. So basically, all the global indices are at important resistance levels, are in between or at important moving average resistances. The Dow Jones just breaking the 50-day moving average. Many of them are at multi-year supports or resistances. All of them are basically looking as though they are more in an uptrend, and no divergences, no weaknesses on any of the indicators. And if the resistances get broken out, then we definitely are looking at the markets most likely moving up, right? But given that a lot of they are at important resistances, if any of those resistances do hold, then it's possible that we could see a downward move. So but for now things are looking bullish, and that's the bias for the short term, right? So much for all the bad economic news. We are in spite of that, global indices seem to be doing quite well. Remarkable recoveries. Coming to India now. A bit of a clutter in the chart, just because it's seen so much, right? So first of all, the underperformance of India continues. Comparatively, a very poor recovery, as we've already mentioned last week, and we have recovered just a shy of 38%, right? So we are at 9,266. Some nice moves, and given that the rest of the world is looking bullish, there's, I guess, every reason why India should also keep going up. We did do a really 3.5% gap up on Friday morning, closed that gap, and then recovered in the last half an hour, 45 minutes, and came back to close at 9,266. We are really nowhere as, let's see if we are any close to any resistances as such. So there, but that was crossed. All right, that resistance was crossed this week, or the week that went by rather. And then we probably have maybe something there, right? And that's at 10,000, right? So 10,000 is, that's another good 800 points higher. That would really be an impressive move, which I think is going to catch a lot of people by surprise. But in the Elliott wave discussion we had last week, and we'll do a more detailed thing later, either today or tomorrow, we did say 10,000 is possible. So on that, we can still see the possibility of 10,000. There's also, I think you should keep watch out for 9,500, 9,690 levels on the way up, right? And again, really no sign of weakness or any imminent danger to this up move right now, right? So yeah, so let's close that close the webinar here. So across the world, looking all good. Some places are way better than others, obviously, but otherwise bullish bias for the coming week, right? Just to look at some other things, which is crude oil. These are near month continuous crude oil futures on NYMEX, right? That's just going from a bottom to another bottom. This is $18. This is and was the last time we saw that was in after the dot-com bust. Okay, and the lowest has gone to is 10 in 1999 and in 86, at least from the time the data is available here. And who knows, that 10 means another almost 50% cut from the current prices. Interestingly, India has not changed any of the petrol or diesel prices at pump in the last, I think, 3 weeks or 1 month now, right? So none of the benefits being passed on to the Indian consumers. Of course, the government is in a deep financial hole, so they want to raise as much money and as much taxes as they possibly can, and petroleum consumption being one big revenue generator, I don't think the government is going to be in any hurry or mood to cut that. And anyhow, everybody's in a lockdown, you can't protest, so what's the point? So fascinating that we are at historically low levels, and we've got $17 looking, and really no sign of okay, maybe some not really. Okay, short term, maybe we will see a bounce, and maybe it'll go back to 20, 23 at best, as at this point is what I would say. But and this fall is going down on lower and lower volumes, quite drastically lower volumes, as you can see, right? So interesting to see how much further down it will go. Maybe bottom out at 15 psychological number and then turn around. But definitely bullish divergences are there, strong bullish divergences. If you're trading crude oil abroad, then one would want to look at how that's panning out. And then finally looking at okay, DXI is the dollar index. Okay, so interesting. Not really a triangle, but making a sort of triangle. So the dollar index is an index that measures the strength of the dollar against a bunch of other global currencies. 1994, it was this high. Wow. That's and then in 2008, it went to 71. That's the lowest. So we've got data all the way from 71. Right, so about 50 years of data. So all said and done, if you look at this from a really long-term perspective, monthly charts and now weekly charts, right? I would say, okay, weekly charts a little too much noise. As far as the monthly charts are concerned, it looks like the dollar could be being very selective with my words, setting itself up for some breakout, perhaps. I can't be sure, of course. Where is this mess? That's the level to watch out for. That's at 100.7. It may depreciate in the short term, right? But I think in the longer term, again, this dollar index is perhaps headed higher. Now that's difficult to square off with all the currency printing that's going on, left, right, and center. But then these are all relative, strengths, and it's really a question of who prints more, and relatively speaking. And besides, as of now, still with dollar being the reserve currency, this could no reason why it can't strengthen. Plus, there's a lot of increasing talk about the West taking on China. More and more countries thinking, feeling that China is to be blamed for the COVID, that they suppressed data, they didn't share, that it's who knows a conspiracy intentionally to bring down economies. And if countries start to think about retaliation to China, some sort of soft war, if not a hot war, um, in whatever form or shape, sanctions or electronic or financial or sanctions or export restrictions from China. Um, um, to so if that happens and some sort of that geopolitical disturbance happens, which seems the noise for it is growing more and more, then the dollar will definitely shoot up, and which definitely means that the Indian rupee will depreciate further. So coming to the Indian rupee chart, we've got let's add more data. Suddenly, where's data? It's taking time to load. Some reason today is something funny on this. There was more data available. All right, anyhow. Uh, so this is the the level that one was watching on the Indian rupee till that was like held since September last, 72, and once it broke 72, it's just been going up, 77 and all that. There was an article by a very prominent CEO saying, "Oh, this and that and all, in 90 is not possible. 80, I think 80 or 90 is not possible." I don't know which CEO, one of the major listed company, FMCG or something, or Reliance or Hindustan, or I don't know, one of them. But you look at the charts. Why not? I mean, this is at the historically highest level that we've seen the USD INR at, and it's in like we say, blue sky territory. Let's see if I can get a different USD INR is only one. Wait one sec. Okay, this might give us something else. Right. I should remove this. Right. Okay. So 76. Right. So by the way, USD INR is traded in foreign markets now. Not very liquid, but okay. It does give you a reference price. There are days when 10 contracts are traded the whole day, right? So it's not like the Indian currency is really a hot favorite of anybody. Of course, every country likes to think that they are great, but when you look at its data and how much any activity on its currency or news is happening in the large global markets, be surprised as to what you find. So anyhow, so that's the level that I was talking about is here, that broke out. Let me just move. Crazy thing there. All right, so thereabouts, and then it's broken out, and that's it. And you know what? It looks more like a flag now. So if you say 72 to say 76, That's 4 rupees. Another 4 rupees would easily make it 80 rupees to a US dollar in maybe what? Let's say what? This is March, April, May, June, July, by August. Very possible at the end of the year we are seeing 80 rupees to a dollar. So anybody needing dollars, better buy your dollars now. And if anybody is well getting dollars or having dollars, just hold on to it. You will probably see more money in Indian rupee terms soon, right? So great. That's the overall review. Oh, I also wanted to add gold to this discussion. So I'm just going to keep it gold to US dollar. Right. So there you see gold. Right. Okay. Only since 98. Right. Disappointing. All right. We'll look for more data later. But yes, gold as expected because of the all the geopolitics and COVID and everything appreciating. There's just traditional economic theory borne out by data that generally when there's a conflict, etc., gold tends to appreciate, and that's what's been happening. So April last year, gold was at $1286, I think per ounce this is, and now we are at 1686. And if you think about it in rupee terms, it would be definitely be a lot more, right? Because the rupee has also depreciated, and gold is likely to keep going up. The immediate resistance is 1793. Okay, and once 1793 happens on gold, then we are seeing much higher. Once 1911 goes, if it goes, which I think by the looks of it, it will go. Then people are giving all sorts of numbers, $2,000 gold and all that stuff. Why not? Why not? This would be a massive what 8-10 year consolidation of the gold price that is going on for a decade, and then boom can happen, and uh, gold could be much higher, right? So I don't know, if you want to make any of your ladies happy, you should buy some gold and gift it to them, and it'll be safe with them. Whether they'll give it back to you, I don't know, but the value of it is probably going to go up, and you'll probably be a happy person too, right? Everybody's be happy. All right. So with that, we come to the end of this, well, I think global market review. Let's call it that. Uh, any questions, any additional pointers or anything uh, that we can close for the Neeraj is asking, how do you buy gold call option on NSE through Zerodha? I'm not sure. I don't do commodities on Zerodha, so I have no idea. But you must have a commodity account first of all with Zerodha. Most people, it's a separate account and not linked to your equity account, right? So first just check on that, and maybe we can have a discussion on that separately. All right. So thank you. We will stop the session here. So this was the global market review. I should probably have a new slider page for this. We will be putting this up on the YouTube channel. I hope you have subscribed and added notifications. Look forward to it. I'll send you the links, and you can feel free to forward these links of the YouTube channel to whoever you want and who might benefit from this discussion, right? Thank you very much, and I will see you on the other side for more sessions. Bye.
Bye.